Microsoft is currently down around 35%, and in this video I want to step back and look at the last 30 years of history. The goal here is simple. Whenever Microsoft went through a major decline, especially falls of 20% or more, what happened next? How far did it fall? How long did the decline last? And how long did it take to recover? If we look at Microsoft's historical chart, we can see that in the last 30 years, the stock has gone through several major drawdowns. The first major case takes us back to December 1999, when Microsoft was near its peak at around $60 per share. From there, the stock began to decline, and by December 2000, it had fallen roughly 68%. So this first major downturn lasted about 1 year. And that decline was not just a quick correction. It opened the door to what many investors now call Microsoft's lost decade. During that period, the stock repeatedly moved up and then rolled over again. For example, in January 2002, Microsoft was trading around $35, but by August 2002, it had dropped to around $21. That was another 40% decline in just 7 months. Then the stock recovered, but slowly. It did not reclaim that $35 level until November 2007, when it finally reached around $37, a gain of roughly 76% from the low. But then came the global financial crisis. Microsoft fell again, this time from that level to around $15 in March 2009, which was a decline of about 59%. And once again, the recovery was not quick. The stock did not move back above that level until November 23rd, meaning it took about 4 years and 8 months to recover. Then things started to change. In 2014, Satya Nadella took over as CEO, and Microsoft began shifting more aggressively toward cloud computing, while also going through broader cultural and strategic changes. By November 2014, the stock had climbed to around $50, which was a gain of roughly 233% from its 2009 low. But even then, the move was not smooth. By February 2015, Microsoft had fallen from $50 to around $40, a 20% decline in just 4 months. This period is often associated with the broader market turmoil linked to China's market collapse, commodity weakness, and global growth fears. At the same time, Microsoft also had some company-specific issues. In July 2015, the company announced 7,800 job cuts and a roughly $7.6 billion write-down tied to the failed Nokia phone business. Still, the recovery was relatively fast. Microsoft was able to cross the $50 level again by October 2015, which means it took around 8 months from the low to recover. Then came the COVID crash. In February 2020, Microsoft was at a new high around $190, representing a return of roughly 375% from the 2015 low. But then the stock dropped fast. By March 2020, it had fallen to around $135, a decline of about 29% in just 1 month. And what makes this decline interesting is that the recovery was just as fast. Microsoft got back to $190 by June 2020, meaning it recovered in about 3 months. So from peak to crash to full recovery, the whole episode lasted roughly 5 months. After that came another major correction. In December 2021, Microsoft reached a high around $343. From there, the stock began falling as the market reacted to aggressive Fed rate hikes, slowing growth in some of Microsoft's businesses, a sharp downturn in the PC market, and foreign exchange pressure from a very strong US dollar. By November 2022, the stock had dropped to around $214, which was a 38% decline. This time, the decline took about a year to fully play out. Then the recovery began, and it took about 7 months for Microsoft to reclaim its previous high. Next came the pullback that started in July 2024. At that point, Microsoft was trading around $468, up roughly 118% from its prior lows. But then concerns started building around the scale of AI-related spending, and the stock eventually fell to around $353 by April 2025, a decline of about 20%. This decline lasted roughly 10 months, and then the stock recovered back to its prior highs by June 2025, meaning the rebound happened in about 3 months. And now we come to the current situation. Microsoft reached a peak of around $542 in October 2025, which itself was a 53% gain from the April 2025 low, and that move happened in just 4 months. But since then, the stock has fallen sharply again, dropping to around $355, which is roughly a 35% decline. And this decline has taken about 6 months so far. Now, we do not know yet whether this is the ultimate bottom or whether the stock could still fall further. But technically, it does seem like Microsoft may be finding some support around this area, especially because this zone lines up with the previous low from April 2025. Before we move on, I would really appreciate your support in helping me reach the 1,000 subscriber mark. It would motivate me a lot to keep doing this work. So what does all of this tell us? First, a lot of people assume that a mega cap company like Microsoft should move smoothly. But history shows that this is simply not true. Even Microsoft, one of the greatest businesses in the world, has gone through 20%, 29%, 38%, 40%, 59%, even 68% declines. Great companies do not move in straight lines. Even elite businesses can go through brutal drawdowns. Second, Microsoft's declines often happen quickly. Sometimes the damage is done in just 1 to 4 months, but recovery usually takes longer. Fear moves faster than confidence. And third, when the crash is 30% or more, recovery often takes more than 6 months. That seems to be one of the recurring patterns. The company may be strong enough that these crashes do not last forever, but investors still usually need patience before normal levels are restored. Another thing we notice is that once a rebound starts, the upside can be very meaningful. In some cases, Microsoft has delivered returns approaching 100% or more from depressed levels, which is substantial for a company of this size. Of course, we also have to stay realistic. Microsoft is already around a $3 trillion company. A 100% return from here would imply a $6 trillion market cap. That would be equal to 20% of the US GDP. Imagine that. So, while history shows strong rebounds are possible, the scale today is very different. Now let's talk about valuation targets, but before that, just a quick disclaimer. This is not financial advice. Starting with the PE ratio. Microsoft's current PE ratio is around 23. Historically, it has been closer to 32, which would imply the stock is trading about 39% below its long-term average valuation. Now, of course, we should be careful here because in its worst periods, Microsoft's PE has fallen much lower, even into the 9 to 15 range. So historical averages are useful, but they are not guarantees. Still, if Microsoft's PE ratio were to move back toward its historical average, the share price could move closer to around $520. And what makes this more interesting is that if we compare Microsoft with the other Magnificent Six, excluding Tesla as it has a crazy PE ratio, Microsoft currently appears to be one of the cheapest, roughly in line with Meta at around 24 and below Alphabet at around 27. But if you zoom out over the last 10 years, Microsoft has often traded at a higher valuation than Apple, Alphabet, and Meta. So that does suggest there may still be meaningful upside if sentiment improves. Now let's look at the PEG ratio. Microsoft's current PEG ratio is around 0.8, while historically it has been closer to 1.2. If the PEG ratio were to move back toward that historical average, the share price would imply something closer to around $560. So now we are beginning to see a valuation range forming. And if we compare Microsoft's PEG with the rest of the Magnificent Six, it sits somewhere in the middle. Not the cheapest on that basis, but still not expensive relative to its history. Then we can also look at what outside valuation models are saying. AlphaSpread shows an intrinsic value around $393, which is not very exciting. ValueSense is around $398. Value Investing is around $380. Then GuruFocus is much more optimistic at around $537. Now we are talking, and Simply Wall Street goes even higher to around $595. So clearly there is a wide range. Some models are conservative, some are much more bullish. Personally, I do not think it would be far-fetched to target something in the $450 to $500 range by next year, assuming the broader market remains stable and Microsoft continues executing well. So let's stop here for now. I will try to make a more detailed video on Microsoft, just like I have done for other companies. And do not forget to check out my playlist, because you may find some very good businesses there that perhaps offer even stronger long-term return potential than a fairly mature company like Microsoft. Let me know in the comments what you think Microsoft's target price should be, and also which company you would like me to analyze in a similar way next. Thank you for watching, and I will see you in the next one.